So are you a real estate professional? If so, if you've passed those two tests, if so, it could be very exciting. And this is why. So the IRS taxes you with, or they call income and losses, they put them into buckets, right? So you got an ordinary income bucket and you got the passive income bucket, and they don't mix. So here's the exciting part, right? They don't mix. But if you're a real estate professional in the eyes of the IRS, like me, then all of my income from my real estate activities, whether it's my team and I, a buyer or a seller and making a commission selling a house, or whether it's income from the rental properties, for me, that goes all in as ordinary income. So what that means is if I have a loss from those activities, it reduces that ordinary income, and then I get a lower taxable income. So it's really important with real estate because remember back to some other videos, one of the magical things about investing in real estate is that you get to depreciate the asset. So the improvements like the building, the pavement, the sidewalks, the wiring, those kind of things you can depreciate. I mean, they don't last forever. So the IRS allows you to say, hey, they're worth less. So I have that loss from depreciation. That reduces your taxable income. That doesn't mean that you don't get cash. You can still get the cash, but the paper loss here means you have lower taxable income. So it's a big deal. So if you're that contractor, you're that doctor or whatever, and your spouse has a real estate license and is active and passes the real estate license or the real estate professional criteria by the IRS, then it is possible that your jointly filed married tax return can use your losses from real estate to offset your income from being a contractor or a doctor or whatever. Now, this is huge, okay? Each person is different. Each person's setup is different. Each married couple is different. So you need to make sure you talk to your tax preparer, but you need to make sure you ask if you are an investor or you want to be, and if you want to reduce your own taxable income, then you need to ask that question. But definitely ask your tax preparer because ultimately that's who's going to prepare the stuff that's sent to the IRS. This is a big deal. You need to learn about it. You need to know it and take advantage of it if you can, because there's no use paying more taxes than you